Are you tired of sifting through countless investment options for your portfolio, trying to pick stocks and really struggling with it? Well, look no further. In this video, we're going to have a quick head-to-head comparison against two UK Dividend ETFs that exist, one being IUKD, iShares UK Dividend ETF, and the other being the WisdomTree UK Income ETF. These two ETFs known, first of all, the iShares one by IUKD, and the WisdomTree by WUKD. Breakdown, we'll have a quick look at some of the financials of these two ETFs and then do a bit of a pros and cons for each one, and then leave it up to you to decide which one you're going to invest in. And I do invest into one of these. I'll put that out there at the beginning. So let's kick off and first of all have a quick look at the iShares UK Dividend ETF, known by the ticker symbol IUKD. This one basically looks at tracking the FTSE UK Dividend Plus Index, and that basically contains the highest yielding UK stocks. We'll have a look and see what some of those are later on. Let's do some of the quick high-level details on this fund. First of all, it has 52 stocks within it, and it's a reasonably large fund coming in at £820 million under management. Looking at it paying a dividend yield of 5.33%, and that is above the base for the FTSE 100, and it is a quarterly paying dividend ETF, paying out in March, June, September and December. If we have a quick look at its dividend history, how much has it been maintaining or growing its dividend, it is looking at a streak of 3 years. You'll see that both of these ETFs were hit pretty badly in the COVID lockdown period. Looking at growth, so we have a quick look at that dividend growth rate. On the 5-year dividend growth, it is a minus 6.23% growth rate. Over that 10-year period, this is much better. It's looking at just being slightly minus 0.45%. Let's have a quick look and see what things look like when we look at the growth. So looking at the growth of this ETF, everything's been hit pretty hard over the last period of time. And in the last year, it is looking at actually only being down 0.64%. If you then take that out to the 5-year point, it is down minus 21.15. But COVID is in there as a big part that hit it, and it has struggled to come back up from those lows of March 2020. But then looking at that sort of 5 years compound annual growth rate, we are looking at a minus 4.2%. Let's have a quick look at the holdings of IUKD. So we can see here that the top 10 companies within this ETF make up just over 39% of the holdings. And some of the big names that you will know in there that are favourites in many a dividend portfolio come in with HSBC on the banking side of things, Rio Tinto on the miners, a couple of tobacco companies through BAT and Imperial Brands. And you will notice that quite a few of those actually sit within my dividend stocks or have been in my dividend stocks at some stage. Why don't you go and have a look at this video where I talk about my holdings in my most recent portfolio update. This being a UK dividend ETF, surprisingly very much just over 94% in the UK, and then we are breaking that down by the sectors, looking at the financials, consumer staples, utilities making up the top 3 sectors that you would be investing into. And then quite importantly, how much does it cost to hold this ETF? And this has an ongoing charge or a total expense ratio of 0.4%, and that is certainly towards the higher end of where I would like to be paying for an ETF. Now let's jump across and have a quick look at the WisdomTree UK Equity Income ETF, and this one is all about tracking UK dividend stocks with high dividend yields. funds. This one also brings in a bit of that ESG criteria, so looking at the environmental, social and corporate governance side of things. Let's go through something similar to what we did with the IUKD. So we're looking at this 63 companies within this ETF, and this is a much smaller funds under management side of things. This is really quite small and a bit of a worry for me, coming in at about 10 million, very small fund. This one pays biannually, so we have a payment in January and July, and its dividend yield is coming in just slightly higher at 5.55%. It doesn't have a streak at all, so it has seen a cut in its last year's dividend payment, so it has got a 0-year streak. Looking at that 5-year dividend growth, it is coming in at minus 4.48%, and it doesn't have a 10-year dividend growth rate because it was only formed back in 2015, so a much younger fund. Let's have a quick look at how has it performed over a couple of time periods. So in that 1 year, it is down 0.49%, so slightly less than the IUKD ETF, but it took a much bigger slump over the past 5 years, and it's down over 27.34%, giving it a 5-year compound annual growth rate of minus 5.5%. Over the 1 and the 5-year periods across these two different ETFs, there really isn't that much between them, but you could say that IUKD was slightly more volatile. It dropped a little bit more if you look at this chart over the 5-year period, and also it has seen itself doing slightly better more recently, is currently down less over that 5-year period. But how much does WUKD cost total expense ratio? This one comes in at 0.29, which is in a slightly better position than the IUKD side of things. Let's have a quick look at what is in this ETF. The top 10 holdings make up 42% of this ETF, and that's out of the 63 holdings that there are within the ETF. We are looking at some similar stocks in here, so we've got National Grid and Rio Tinto in here, as well as HSBC, but we have some others coming into the mix. So you've got those two big supermarkets in Sainsbury's and Tesco's, and you've also got Land Security Group in there, and then a couple of utilities with SSE, National Grid and United Utilities. We are looking in around a 96% holding within the UK, a little bit in Israel, and then if we look at this sector breakdown that we've got, slightly different with it going financials, utilities and basic materials. So that's a quick whistle stop through the two of those. Let's have a quick look at some of the pros and cons. Where does one beat the other? So if we look at some of the pros on, we'll start off with WUKD ETF. Some of the pros: it offers a higher dividend yield than IUKD. It is slightly more diversified because it's got obviously the 63 companies in there, and it does have a lower expense ratio. And we always say it is better to keep more money in your pocket than pay it out in fees. And even that 0.11 of a percentage difference over the long term could see loads of money being eroded from your investment pot. Some of the cons: there is a higher risk with that concentration into mid and smaller cap companies within this fund. It's also much smaller in size, coming in at 10 million, which is really a worry for me. It is also much younger, so it doesn't have the track record that IUKD has, and it may not perform quite as well in a bull market or in an economic upturn as we've seen in the 5-year chart, and that's potentially because of some of the companies that we have in here and some of those consumer discretionaries, etc. Looking at the pros for IUKD, obviously it provides exposure particularly to some of those larger dividend companies, those larger companies within the UK. There is a lower risk of diversification across companies and sectors, and it has offered a more reliable, stable dividend yield over time. It's really only in 2020 that COVID saw a huge drop in that, and actually if you look at where it was in 2022, almost back up to pre-COVID levels on the yield that's being paid. Then looking at, it may be more suitable for the conservative investor. If you look at some of the companies that are in there, they're the ones that tend to be in everybody's dividend portfolio. Then looking at some of the cons, obviously it's got that higher expense ratio coming in at 0.4%, and potentially if you are looking at slightly larger growth, you potentially don't have as much exposure into some of the more mid-cap companies. But as I say, always go away and do your own due diligence, and if you need to, go and speak to a financial advisor before you actually start investing into any of these ETFs or companies. But why don't you go and have a quick look at this video that actually talks through some of the other ETF options that there are out there, and there may be one or two in there that tickle your fancy. Thanks very much for watching, and I will see you in the next one. Cheers, bye.